What's up, guys? It's your boy Bullfrog. Today we'll be going over how to master gold. Now, I have been scalping gold for the past 2 weeks and I'm undefeated. And I am going to show you the secrets you need to always determine which way the market's moving when you are comparing gold against the US dollar. Today's key point of the learning lesson is the DXY, which is the US dollar currency index. You need to study this. You need to go outside of the video, learn the history of the US dollar index, learn what's it about, how it operates, everything, right? Aside from that, there are news events like FOMC, CPI, all that stuff. I'm not going to get into that for this video, but also news plays a very big factor. So, in this example, I have drawn two key points. We have Wednesday around 11 a.m. and Thursday around 5 a.m. Wednesday around 11 a.m. you start to see the DXY pump up. I believe there was a news event that happened there. And on Thursday you start to see the DXY go down in a downtrend. Now, look at gold. What do you guys notice? On Wednesday around 11 a.m., it pumped up during the news event, but instantly dropped down after, all the way to around 5 a.m. on Thursday. And then it started to pump up. Why is that? Do you guys see the correlation between the two? Because if gold is going down, then most likely your DXY or your US dollar index is going up. And if your US dollar index is going down, then your gold is going up. This is how you master trading gold, and you will make at least $100,000 within your first 2 years off of $1,000. I guarantee you that. Look at the time frames. The maximum I go is a 15, maybe even the 30. I don't go any higher than that because I'm a scalper. But you see how the confluence and how they trade so well together. Because the gold is against the US dollar. So if the US dollar is on a bull run, then your gold's going to be on a bear run. If your gold's on a bull run, most likely that's because your US dollar is on a bear run. Simple, not hard. This is how you master it. Now, how can you tell which way is going to go? Well, that's when the frog strategy comes in. We'll go ahead and put on the Vindicator. You can use whatever momentum indicator that you would like, but for this example, we'll use the Vindicator, and we will also be using the Fibonacci pivot points. We'll do one by Muhammad. And we'll go ahead and be drawing a trend line break. So right in this example, you had your trend line break right at 5 a.m. right? You had a bearish divergence, extremely bearish divergence. Not only that, you had it up in the premium entry Fibonacci area for short positions. It started hitting resistance. And after that, you have a continuation to the downside of more continuation of bearish divergence, and so on. You have another one here, another one right here, and these are all along the lines of a trend line break. You do, excuse me. there's also other time frames you want to be checking. 5 minute for your like and below for your entries, but for the overall trend, you'll be looking at a higher time frame. Now you can go to the 1 hour. Like, it's not impossible to know, because if you go to the 1 hour, you'll be able to see that there was a bearish divergence on the 1 hour for the US dollar index. So that was letting you know the US dollar is going to start falling, which means gold was going to start rising, right? Momentum dying down, price keeps going up, bearish divergence. Now for the trend upward, you would have saw, and this was a news event, but still, it's still valid. You would have seen that, excuse me, there was a hidden bullish divergence. Right? Hidden bullish, your indicator made a lower low, but your price made a higher low. You guys could study divergence from regular, hidden, and extended. Google it, YouTube it. Very, very strong knowledge to know. Now, this candle was the news event, so of course a lot of people are generally not going to take this divergence because it's very risky to trade news. I don't care what anybody says. Yes, if you know what the news is going to be, you can ride the news down. But, you know, say if you had a stop loss, whatever, your stop loss definitely got hit. But besides that, you still had another divergence here for a hidden bullish to continue having your price go up. Then you had your bearish divergence here. When your one divergence happens and then another one appears, this previous one always gets canceled out. All right? That's how divergence comes into play. And if you look at gold, you will see gold was vice versa. All right, you see right here, you had your bullish divergence. And then you might even say that this was a hidden bullish. But you would need to break it down to a lower time frame to tell. And if you look, it was a hidden bullish on the 30-minute. This is where multiple time frames always go into influence too. All right. Whatever time frame you choose to use, always look at another, because even though it was barely a hidden bullish on the hourly, it was very hard to tell. It was a clear picture on the 30-minute. But this is how you master gold. Use gold against the DXY. If you see a huge bearish divergence on the 30-minute or 15 or hourly, whichever you choose to use, most likely I say about 99% of the time, right at don't mean to cuss in my videos, but right at 5 a.m., you'll see that gold right at 5 a.m. started to go up. Very simple, guys, not that hard. Combine the frog strap to determine the trend of DXY. Use that to determine the trend of gold. Appreciate you guys coming.